Can start, sir.
Yes, sir. Good evening to all respected members. Trust you all are doing well. First off, a very warm welcome to all of you on second day of this virtual webinar series on bank branch statutory audit. First off, on behalf of entire Gurugram branch and managing committee, I welcome CA Premnath for today's session. Today we are having a bank branch statutory audit webinar on the topic of bank data analytics for reporting under LFAR and IFC. For this, we have a very well-known subject matter expert and an eminent speaker, CA Premnath sir, with us. Let me introduce our guest speaker, sir, with us, though sir does not need an introduction. Still, let me read out the brief profile of sir. Sir is a practicing chartered accountant, practicing as FCA and partner in MSc Ramchandram and Company Chartered Accountants, located in Hyderabad. Now, let me read about some of the professional works handled by the sir. Sir has handled various bank central statutory audits, branch statutory audits, concurrent audits, and revenue audits. Sir has also handled internal and external forensic audits of large manufacturing companies, infrastructure companies, software companies, and PSUs. Sir have also made several representations before income tax representation, including international taxation, transfer pricing, etc. Regarding training program, seminar, conferences at ICAI since the year 2000, sir has been a regular speaker on bank statutory audits, reported under CBS, GST, e-filing, XML, XBRL. Sir is a visiting faculty and a regular visiting faculty at Income Tax Department, Staff College, Hyderabad, GST Central and State Government, Hyderabad on GST Fraud Analytics. Sir is also a visiting faculty with CAG, CNG Staff Training, Hyderabad. Sir has been a visiting faculty with various other statutory organizations also, like IDBI, Andhra Bank, Indian Bank Staff Training Institute, review of annual return from lender's perspective. Now, let me request to CA Premnath sir to please start the session.
Yeah. I hope is my voice level audible?
Yes, sir. Yes, sir.
Yeah. Right. Okay. At the outset, I thank Gurugram branch for giving me this opportunity. Respected senior members and Gurugram branch committee members, chairman sir and all. So I thank the branch for giving me this opportunity. So today's session is very important from 2 points. One is LFAR and the other one is internal financial controls. So both these issues let's try to cover today. Yeah. So, am I sharing the screen, sir?
Yes, sir. Yes.
Yeah. Thank you. Right. So let's start with a very important slogan, that is Dharmo Rakshati Rakshitaha, meaning that if we comply with the Dharma will protect us. So what is the Dharma? The Dharma for a chartered accountant is ICAI Code of Conduct. So I repeat again, Dharmo Rakshati Rakshitaha, meaning if we comply with the Dharma will protect us. Similarly, Dharma for chartered accountants is ICAI Code of Conduct. So what is ICAI Code of Conduct? ICAI Code of Conduct is all about ethical standards. And in the ethical standards, it keeps reminding us about compliance to ethical standards, technical standards, and professional standards. So these three standards all along the code of conduct. On one side of the coin, it will be talking about the ethical standards. On the other side of the coin, it will be talking about compliance to technical standards and professional standards. Okay. So in any audit, in every audit, are we mentioning that I am complying with the Dharma, the ICAI code? Yes. For I think that the participation is less here. So what I would request is, since it's a small, very small group, may I request the participants to be interactive so that this topic can be of more interesting. Can I ask the members to respond on the chat? Are we stating somewhere in the audit report that we are complying to the Dharma? Let us be as a more informal, let us be as more very informal rather than a formal session. Yes, sir. Chairman, sir, thank you very much for your response, Vikash Gupta and all. Can, if I am not asking like a teacher, can you please state at least a few lines where we state in the audit report that we are complying with code of conduct? Yeah, with guidelines of, yes. Thank you, Shivani Gupta, sir. Mishra, sir, yes, true and fair means complying to Dharma. Yeah, sure, sir. Very good, sir. So let me take you to that Dharma in our audit report, and then we'll straight away go into the presentation. So let me take you to this is what the ICAI, this is what the SA 700, and I've taken the SBI report of 2021, SBI audit report I have taken for 2021. So in this, we say, in the beginning itself, we say that we have conducted our audit in accordance with standards on audit. The standards on audit is a professional standards. And we say here, we are independent, we have conducted the audit as per in accordance with code of ethics, ethical requirements. This is ethical standards we are talking about. We are saying everything positively, that yes, I have done this. And going forward again, somewhere we say, yes, the financial statements as a whole are free from material misstatement. Meaning we are saying the financial statements is a technical standards where where auditing standards, RBI compliances, or GST compliance, or income tax compliance, or all the related framework is compliant. That's what we are saying here. That is, I am saying here that I am complying to the technical standards of Dharma. Here I am saying we communicate those charged with governance, and I am saying here I am complying to the professional standards of Dharma. Planning the scope of audit, here I am saying professional standards of Dharma I am complying with. Here I am saying ethical requirements regarding independence is communicated. Again, ethical standards of Dharma I am saying here. And I am saying here professional judgment and professional skepticism throughout the audit. Now, this is where we are saying, that I am complying to the Dharma, and let Dharma protect us. But in a lighter way, I think many of the members will agree. after this computers and MS Word is invented, any audit report is simply Control A. Yes, sir, Control A. Then what, sir? Can anyone complete? The next one is after Control A on the audit report. What is that we do, sir? Yes, sir. Super, Secretary Jitendra, sir. Control C and Control V, copy and paste. Yeah. Then, sir, if we don't use Control F, find and replace. Yeah, Shubham Mishra, sir. If we don't use Control F, find the client name and replace with our client name. Find the other auditor name, replace with our auditor name. Find the date and replace with the current date. Next is Control F. So Control C, Control V, Control F, Control H, find. After that, sir, after that, Control S, save, and Control P, print. Now, in this Control A to Z, most of us or some of us, we don't look at the content. And that's where today regulators, like if you look at the NEFRA's reports, audit quality report of NEFRA on Deloitte, KPMG, and E&Y, you would have seen they have gone to an extent of stating that you have intentionally stated that you have complied with Dharma. In fact, your working papers are saying that you have not complied with Dharma. And to that extent, regulators are behind us with respect to reading in between the lines of the audit report we have stated. Like we read in between the lines of GST Act, in between the lines of Income Tax Act and Companies Act. In the same way today, regulators are reading our audit report in between the lines and stating that you are not complying to the Dharma. So with this, let's move into today's presentation. Yeah. The topic is data analytics with LFAR and IFC reporting. So before that, we need to understand the Indian economy, the way of Indian economy, and that gives a lot of scope for us to understand internal financial controls in the banking industry. The total GDP is 233 lakh crores. Out of that, money that is getting circulated in the banks is 200 lakh crores. And banks credit is 182 lakh crores. And among this 182 lakh crores, 13 to 14 lakh crores of NPAs, the country is bleeding. Banks are bleeding nearly 14 lakh crores as NPAs. And this is a huge amount. And among that, it's only a declared one, 13 to 14 lakh crores. Undeclared NPAs sitting huge. Then banking frauds are 3 lakh crores. If you can measure this, it is almost, you can set up, you can modernize complete Indian railways, like, or you can have a bullet train from Ahmedabad to Mumbai, and you can also have a bullet train from Mumbai to Chennai, from Delhi to Chennai, and you can also have a bullet train from Mumbai to Calcutta, and so on. That much of huge money banking frauds have eaten away, and this is just because of internal control violation. And this is just because of the internal controls, ineffective internal controls. And that is what today, and that's what today we need to address in our, that's what we need to address in our audit today. You may say, is this not there? Is this internal financial controls not there in the earlier audit? It was there in the last year also. But is it new since last year, or is it there since many years? It is there since many years. If you can read this audit report paragraph, we are saying here, we also identify and assess the risk of material misstatement of the standalone financial statement, whether due to fraud or error. I'm saying I'm complying to the dharma of studying the internal financial controls, design and perform audit procedures in response to those risks, and obtain audit evidence sufficient and appropriate to provide the basis of our opinion, which is true and fair. So we are saying this much here, that I am complying with, I am complying to the SA 315. This is SA 315, risk of material misstatement. Remember, SA 315 is the mother of internal financial controls. And this internal financial controls is not new. It has been brought into the Act, Companies Act from 2016, but it was there since years in the audit. It's not new. So hence what I say here is, we were under obligation to report all this, but somehow, since there was no provision to report, we have not done it. Okay. However, but it is time for us to wake up and take this challenge of reporting internal financial controls, so that we are assured of the bank branch audits in the days to come. So as I said again, if you can permit me, I'll again request you to put a chart. How many of you think how long this bank branch audits will be there? Can someone respond, please? How many of you think that in how long this branch audits will be there for us? Can someone respond, please? In a most informal way, please. I think up to 22, Abhishek sir, and 2 years, few years, Pramod Kumar sir and all, Rajesh Rani, 2 years, 5 years. Yes, sir, rightly said. Though we don't like the statement, I can't digest that the bank audits will not be there for years to come. But we have digested that GST is no more. GST audit is no more. We have digested that certain income tax audits are no more. And but I say with gut feeling that if we are able to highlight the internal control weaknesses in LFAR and IFC report, I'm damn sure for next 20 years, no one can remove the branch audits from us. You will agree at the end of the session that yes, there is a lot of value addition that we can do it in this front. Having said, let's move on here. And it's starting that I start here with Supreme Court judgment on Amrapali on the bankers. It has come very heavily on the bankers, and you can read for yourself. It is observed that there was no monitoring done by the officials of Bank of Maharashtra, Andhra Bank, and other banks by releasing of term loan to the company. Even basic checks, end use of funds were foregone. No technical requirements followed while releasing the term loan. Banks acted as mute spectator to unapproved diversions, which was almost happening evidently in all banking transactions. So heavily, Supreme Court has come on the bankers that the controls are very weak. We know this, but LFAR, in the LFAR reporting, though we have to report on the systems, we only say no, yes, no, not applicable. And this is an evidence to the RBI saying that you yourself, the lacks of 1 lakh of chartered accountant, majority of them are accepting that the internal financial controls and in the LFAR, you are saying no major observations. Then what is the need of audit? All these years it was NPA audit, and now thanks to a lack of chartered accountants who have complained rigorously on the NPA systems, now RBI has come out with a circular last year giving a mandate to the banks to set daily NPA marking from 1st of July, and that has started doing it. But still, NPA is a biggest challenge. Only for term loan they can mark it on a daily basis, but not for the CC accounts. I will prove it. So let's go into those areas. But the point what I'm saying is, I keep repeating at the cost of boring you, that we need to fill the IFC report and the LFAR with tons and tons of stories. And don't worry, those stories are already available in the CBI reports, which I'll be discussing. So let us borrow the language. Let us borrow the bankers' language from the forensic reports that are available in the CBI reports, CBI FIRs. All banks have appointed forensic audits for more than 10 crores and 50 crores of bank frauds, bank NPAs. And in all those cases, banks have filed a complaint with the, as per RBI circular, with the CBI, and CBI has filed an FIR, and that FIR copies today are available. And more than 1,500 banking fraud cases, FIRs today available on the net. I have taken few. I'll show you the website also. You can visit that place. Why we should visit that CBI website and download all those is to borrow the language of bankers while filing a case on the borrower and also on the chartered accountants. They have gone to an extent of filing cases on the chartered accountant also. I'll show you all those. So what I'm saying is, let us read all the content. Let us read the content language of the bankers with respect to their own internal control violations and hit them with the same language. And for that, we need to read and copy paste their content into their own LFAR and their own IFC. And that will ensure for the next 10 years, a safe bank branch audit. Then you may see that what's happening to the IS audit. So the IS audits are inadequate. The IS audits are inadequate. The IS audits are inadequately scoped. It lacks coverage of end-to-end testing all its interfaces and input, process, and output controls. So some of you might be wondering, what is this interfaces? Interfaces is like many of your clients' businesses, they use Tally. For fixed assets, they use another software. For financial accounting, Tally. For inventory, another package. For sales, another package. For HR, another package. For GST, one package. For ETDS, one package. Like that, there are multiple softwares are used, which are definitely not integrated with it definitely means which most of the cases are not integrated with Tally. In the same way, today, banks are using CBS. Along with CBS, they are using software for fixed assets. They are using another software for HR. They are using another software for NPA provisioning and recognition. They are using another software for loan processing. They are using another software for MIS reporting. And they are using another software for their treasury management of selling and buying of scripts online. And they have many more softwares. And all these softwares, or many of these softwares, contribute to the financial figures. And how much of that is interfaced? How many of those softwares are integrated with the CBS? If so integrated, is there an input? Is there a process? is there an output control, is what not tested properly in IS audit. And there is no testing on configuration control of input control in the interface, and all application controls covering edit and validation checks. You kindly remember this word called validation checks and completeness and accuracy. I keep repeating with examples again. And there is no scope for reports generated from logic to completeness perspective. And mandatory fields are not adequately defined. Kindly remember even this mandatory field word. And these are very much required in audit under CBS environment. Now you may ask me, is it my responsibility as a branch auditor to look into the IS audit? I say, yes, it is our responsibility. You may ask me how. Then I will take you to the LFAR, and we can see here CBS. Now this is where under 2A, we need to talk about, were there any software, system or manual used at branch which are not integrated with the CBS? If so, details. In case branch has been subjected to IS audit, whether branch is generating exceptional reports, whether the system of banks warrant expeditious compliance of daily exceptional report, whether bank has laid down procedure for manual intervention to be generated, system generated, proper authentication of related transactions arising from along proper audit trail and manual interventions have been obtained, furnish your comments on the data integrity, etc., etc., etc. Sir, I hope you agree. That we are under the obligation of bank IS audit. Sir, any comments here, sir? I would like to look at the comments of the members here, please. With respect to this IS audit experience, I say that it is our responsibility. So any challenges we face, can I have an interaction, please? If you can please help with the softwares which are not integrated. Yes, I'll show you 1 minute. Mr. Shivani Gupta, just a moment, sir. Yeah, you have asked a very right question. I'll show you here. The branch statutory auditors themselves have stated here. Yeah. Yes, sir, Mr. Shivani, sir. I think members are able to read this. It says here, identification of performing and non-performing advances involves establishment of proper mechanism. The bank accounts for all transactions in CBS, which also identifies whether advances are performing or not. Further, NPA classification and calculation of provision is done through another system. Sir Shivani, sir. CCDP application. Now you can see the carrying value of these advances may be materially misstated. Is it may be materially misstated? No, it is materially misstated. For SBI 2019, 13,328 crores, 13,328 crores of NPAs were not detected, and it is detected by the RBI annual quality inspection. Similarly, 45,000 crores worth of NPAs were not detected from the PSU banks. Reason is that not properly followed. They say, as a part of key audit matter, not only the SBI, but almost all the bank auditors have copy-pasted this. And for this, the procedure followed by the central auditors is, one among that is, reliance is placed on the branch auditors, other statutory auditors, the branch is relying. I think Shivani sir will accept with me. And like this, there are many softwares which are manually integrated, and hence we need to be careful in carrying out our LFAR audit. Anything else or anyone else can throw some light? Anyone else can share their experience, please? Yeah, Mr. Priyadarshini CAK. If a branch is not subjected to IS audit, what will be our audit trail for these questions? Yes, we have to. We can ask for the right question you have asked, sir. How do we need to ask? Because I have to comply with the LFAR here. I have to comply with the LFAR here. Unless they share certain information, we cannot carry out the audit. Right, sir? So how should I ask them the information? I should ask them the information with the moment I get a bank branch audit, we have to give an engagement letter immediately. We should send them immediately the engagement letter. Probably I just changed to, okay. Now I am giving an audit engagement letter to so-and-so branch. I am saying here, what is the responsibility of the banker and management responsibility here. And further I am saying here, I am saying to provide us inter alia with access to all times to all information, including books of accounts, vouchers. This will include books of accounts maintained in electronic form. Further, access to reports, if any, relating to internal reporting, additional management, and so on and so on and so on. Now, I'm saying unless you give all these informations and share with us the accounting manual or the CBS manual, and furthermore, I'm saying here, you need to provide me all this information, and all this information is running into 96 points. Let me share you in Excel. This is what you can see here. The audit engagement letter, concurrent audit reports for all the months. Concurrent audit report for all the months. I want this. Why I need this concurrent audit reports? Because in LFAR, we are saying somewhere, in framing your audit report, your comments based on the concurrent or SNAP or internal audit or ASM report or credit report or any other report, you bring in your comments, it is saying. Unless I get this data from them, how will I respond? And like this, we have designed, I don't want to read out all this and waste your time. I will anyhow be sharing these content with you. So I am also saying that you need to provide in the following, whatever data of advances you provide to me in this format, in a format, in nearing to that, and provide me all this data. So unless this data is made available to me, I cannot comply with the audit requirements. More so, you might be asking me, so how do I have a track? How do I have a track of whether all this information is provided, whether my staff has read it, whether my staff had substantially collected all this information or not. I have put all the 96 pieces of information here. All this 96 pieces of information, I have taken it here. And I have noted down why I am asking this for LFAR. Who will read this? It's not just that you collect information. Someone has to read. Which resource will read it? Yes, 10 files they have provided. Bank obtained from bank. Did you read it? Yes. What is that? It is party A closed, account unit closed, party Z not working, party M's restructuring not as per RBI, party A to Z or NPAs. Now you write your comments from the concurrent audit report. What is the bank's reply on it? Because these things have a significant impact on the balance sheet which we are signing. So you need to get a banker's reply. How do you get a banker reply? Through an audit note. What is this audit note? It is SA 265. We are communicating with those charged with governance. You remember I was reading out those charged with governance. We communicate with those charged with governance. I'm saying here, we communicate with those charged with governance. And this is an evidence to prove to the regulator that I have communicated with those charged with governance. And this is chartered accountant, this is banker, and this is what the points I write, and this is what I take the reply. And I have a control here with the replies. Now, whether this reply has an impact on significant accounting, what is the significant impact? Significant notes is all the observations in the bank audit will boil down to 12 points. All the observations in the bank audit will boil down to 12 points, 12 significant notes. And now I am classifying each and every of my observations to this 12, one of them. And if it is not material, I'll simply say leave it off. But if it is to be reported still under LFAR, yes. If it is to be reported under LFAR, which point of LFAR I will write it here. And what annexure. Whether this still to be reported under MOC, still to be reported under IFC, still to be reported under Ghosh and Jilani, still to be reported under any other 38 reports that we are signing. Every observation I have a track here, and through this I say audit control sheet, and which is there in the integrated audit working paper file. And all the members can start working on this. Why I have deviated here is to make you understand that we are carrying out the audit as per the procedures. Now here we said we have deviated from the integration point of view, and I have given you an example as per the interaction, and then let's move on mandatory field and all. So IS audit further experiences master data field completeness, accuracy is not tested. Yeah, further to this, I'll demonstrate live how you can interact at every field with the branch management. We'll just start that. We'll just start that work in a minute or two. Then lack of data governance. There is no checking for overall impact assessment. What actually done is tip of iceberg. Most important, those who do IS audit not understand the business and vice versa is also true. Again, I would be interrupting you, asking you to comment on the chart. Do you know any firm which conducts, firm or a private limited which conducts the IS audits for the branches? Not for the branches, sorry, for the banks. Anyone knows the firms or the private limited firms which carry out the IS audit? Is there any bar from conducting IS audit by a private limited company? Can someone respond? Yeah, there is no bar for a private limited firm to carry out IS audit, and I have seen in in many instances that the corporate IS audit of banks are conducted by a private limited companies, which doesn't come into the scope of ICAI code of conduct. And that's how the IS audits are done. And since it's private limited, the person who go for the IS audit, he doesn't understand the banking business. And those who understand the banking business, they don't understand the technology controls. As simple as that. And that's how the bank IS audits are carried out. Okay. Now coming back, let's start with the control weaknesses. Can someone identify any weakness in the screen, what you see? Sir, I would request the participants to kindly identify if anything unusual in the screen, please. Aman Agarwal, sir, writing style of the name. Anything, sir? Can you kindly elaborate, Mr. Aman, sir? Anything else, please? Loan and deposit by name, by same person. Okay, that's possible, Subhan Mishra, sir. One person can have a loan, the same person can have a deposit also. Anything else, sir? Most crucial thing here. The heading itself is indicating. The heading of the screen itself is indicating. Anyone else, please? Kindly make it interactive because it's a virtual session. I can't see any members. Yeah, Mr. Pramod sir has hit it. Customer ID same, but not account number are different. Then multiple, Priyadarshini sir has hit it. It's multiple customer IDs. Yes, Aman sir, same person having multiple customer IDs. Surendra sir, yes sir, super. Thank you very much for your active participation. So here, there are multiple customer IDs, right? Now, let's go back to the system. Yeah. Now, this is where through which a customer ID is created through the screen called CMM. CMM is a command used to create a customer master. The control weakness here, which is allowing more than one customer ID creation, is under your MCA DIN creation. Once you write the name and enter the PAN number, the MCA database is integrated with the PAN database. That form, PDF form, that PDF form is integrated with the PAN database. The moment you type the name and give the PAN number, it will counter verify and tell you that the name is not as per the PAN record. And it rejects the DIN. It will not allow you to go forward. That is called as a preventive control. That prevents a person creating multiple DIN numbers, so that multiple DIN numbers may be a nuisance because it's the DIN which controls the company. So you have if a person is having a multiple DINs and he is having multiple corporates controlling, that will be a nuisance for the MCA to control the frauds, and that will erode so much of confidence. Similarly, in the banking, today, there is no control. In the sense, there are certain software, there are certain CBSs where if you type the PAN number, it will validate the name and fix it. Good. But the same person again comes out with an Aadhaar name, Aadhaar card, and tells you that I don't have a PAN number. Then in the Aadhaar number, if the name is Singh Rohit Kumar, it will create one more ID in the system, but it will not verify whether this person is already existing. Not only the system, nor the manual processes are not there in public sector banks. Okay, I'm specific in public sector banks because in public sector banks, name creation is still not centralized. But in private banks, the name creation is centralized. The moment you submit your data, they will take that data and verify and re-verify their total bank data and say that your name is already existing and your customer ID is this, and you can use this, and you need not open one more account. To that extent, private banks are working. But however, in PSU banks, still they need to evolve into such kind of working. Okay, the point what I'm saying here is the PAN database is integrated and Aadhaar is integrated, but there is no system to counter check whether the name is already existing in the database. And that is how this has happened in one particular bank. And if you carefully observe, you can see the last line, festival advance staff, and the staff name, and if the staff name has multiple customer IDs. If staff are intentionally or otherwise able to create customer IDs for them different, intentionally or otherwise, now what happens to the general public, to the other clients, is what we need to now. Now, having understood that there is a possibility of creating a duplicate ID, what should be the audit procedure? Let us look into that audit procedure now. Now we have identified a weakness. We are trying to verify whether there are any duplicate IDs in the system. Now what I am trying to do here is now I have removed, this is the master data of banks, master data of customers or the borrowers and loan and deposits. If they are not able to give you the master data, no need to bother. They will have loan balancing file, and they will also have CCOD file, and they will also have a deposits file. So from this loan balancing file, you take the customer ID, account ID, name. From CCOD also take customer ID number, loan account number and name. Similarly, from deposits account also take the customer number, ID and name and paste it one below another. While you paste one below another, for every name line item, you say whether that is a deposit account or a loan account, so that you will be able to find out on a later date. Once you are pasting one below another, you might be using sort and filter. When you use sort and filter, the names will get rearranged. So you may miss whether the name is a loan amount or a deposit account. So before you paste it, write down in one column that these rows are loan CCOD accounts. You insert one row and write down before the name here that these are all loan balances. You insert one row, insert one column here and mention that these are all deposit accounts. So once you mention it, you merge all that into this, and now you can find out, or you can sort or filter, whatever you do it. Now I'll just say here that we have seen one, I have changed the name for the confidentiality. So you will find here different names, and but for how many times I should go on checking like this? Or else you can also have, if you can sort, then you will find if the same name, say for example, Sita is there, SE, and if you give one space, yes space E, then in that case, if you sort, you can able to find out, yes, there are some errors in this. But if a name is like K Sita and Sita K, then you will not able to find out. To find out that, what you need to do is we have to use a fuzzy lookup. Let me just demonstrate that fuzzy lookup. Yeah, this is something called fuzzy lookup. I'll just take this, Control C, Control N. So here, what is fuzzy lookup is, say for example, if there is a name called A, B, C, D, and if there is another name in the same column as C, D, A, B, it is like K Geeta and Geeta K, but letters are same, but arranged in a different format. Letters are same, but arranged in a different format, like Geeta K and K Geeta. This you cannot find out through sort. You can find out through fuzzy lookup. And this fuzzy lookup, you can get this fuzzy lookup from internet. It is not by default in the Excel. I'm using this fuzzy lookup. Then I'm saying within the same table, I wanted here this to happen. And I'm saying 2 letters, 2 combinations. I am asking this to place here. I say, okay. Okay, it may take some more time because it has already given something. I'll just cancel it now. So this is enough for us to explain. So now, yeah. Now you can see here, Abhinandan Gulecha. And in this column, Abhinandan Gulecha, there is one name. So for Abhinandan Gulecha is matching with Abhinandan. Next again, for Abhinandan Gulecha, there is another name called Gulecha Abhinandan in the database here. And that is here, Gulecha Abhinandan. And it is matching 1-to-1. Now here you can see, you have Abhin Varghese, and which is nearing to ABI and ABI, and it's saying 0.29% it is matching. In this way, it will go on putting here Muhammad Sirajuddin and Sirajuddin Muhammad. You can see here in the same database, you have these names also. I hope now you understand. I hope now you understand what fuzzy lookup can do. What fuzzy lookup can do in terms of finding out the duplicate names. So what we are discussing here is, since there is a possibility of wrong name entering, a wrong name, which has an impact on the financial statements, we are now at every stage we are trying to find out, is there a possibility of committing an error while filling this field? I repeat again, at every process of the corporate, of the bank, we keep asking this question, is there a possibility of committing an error in writing this field? If this is written bad, if this is wrong, if this is error, whether this error will have an impact on the financial statements? If yes, what are the controls built around this? Okay, now we have seen there is a possibility of committing an error. Now I would request the members to kindly respond on the chart as to whether this error has an impact on material misstatement. Mayan Gupta, I'll come back to that customer ID commands. I'll share all those things. Yes. Yes, sir. Hemlata Saini, can kindly elaborate whether there is a, can you kindly elaborate that is there a possibility of material misstatement? Because one person has two customer IDs. Yes, super, Saini, super. One account NPA, all the accounts reported has to be NPA, and this is IRAC norms. So if there are ineffective controls built, if there are ineffective controls existing in creation of name, that will definitely affect material misstatement, meaning if one account becomes bad, the other account doesn't become bad, meaning that the loans can be overstated, loans and advances are overstated, profit is overstated, provision is understated, loss is understated, and this is nothing but material misstatement. Okay. Now, again, I say we are asking three important questions. Number one, at every stage we are asking a question, is there a possibility of committing an error? If so, whether this error will lead to material misstatement? If so, whether there are any controls built, is the concept of internal financial controls. Come back. One more. If the type of loan, if the type of account is individual, if the type of account is partnership firm, if the type of account is company, if this is not properly captured, then will there be any material misstatement? For firms, maybe documentation related things may change, but for corporates, documentation related issues may change. For societies, corporate related issues may change. Occupation, if it is agriculturist, the provisioning norms may change, and so on and so on and so on. Meaning every field may or may not have, but wherever every field has a relation, then we need to study this. Now, is this not a part of our scope? Now, is it going to take too much of time? If we are already into the concurrent audit, what prevents us today to reach the concurrent audits venue, concurrent audit place, or concurrent audit branch today, to reach today or tomorrow and find out what we are learning can be implemented or not in a day or two? Maybe there can be 4 or 5 activities we need to test. One is loans, another is deposits, LCs, bank guarantees, and 1 or 2 types of loans, that is CC loan and term loans. Maybe 5 or 6 types of transactions if we can understand, probably we will be able to know on a larger scale what internal control violations are going on. Now, coming back to this again, we have now understood that there is a possibility of committing an error. Now, what bank says, let us listen to that. Let us go back to I am taking you to the RCM. RCM is the crux of internal financial controlling, internal financial control reporting. RCM is the crux. What is RCM? Risk Control Matrix. Come back to this. I said here, is there a risk of committing an error? Yes, there is a risk. So what I said, what is the control to prevent that? The control to prevent this risk of duplicate name is maker and checker, but not a preventive control like DIN number creation. Come back here. Now here, I am talking about a gold loans processes. I'll talk about one or two controls only, not to disturb your time. So I am talking about risk, one aspect. If there is a risk, what is the control environment? Number two, risk control. And if there is a risk, what is the impact on the financial reporting? So this classification of each and every activity, classifying it with risk, classifying with control, classifying with financial reporting is called as risk control matrix. Now, if we are able to understand this and fill this report and submit to the bank, then we are completing internal financial control reporting. So one more question again, in a most informal manner, in a very closed circle. Sir, how many of us have signed this RCM on the date of during the audit period? Did we sign this, or is the statement made available to us after some days of bank audit? Can someone agree on this, sir? Can someone respond, please, on an informal way? The RCM, to how many of them the RCM is made available during the audit period? First of all, is this RCM made available to be signed? Can someone please respond? Yeah, Priyadarshan, yeah. No such report made available. Meaning, so in the last time, during last audit, it was not under our purview to report the RCM. For Union Bank of India, for SBI, I think we are under Union Bank, we have done it, but not at the, but we have not done it on the floor of the audit. But after 15 days, they have sent this. After we even submitted our bill, then they have sent us that IFC is pending, sign it. When we have gone into the details, then there is so much into it because there was a confusion that who has to do this IFC. There was a confusion last time. But before they settle the bill, the confusion is cleared and we have commented on the IFCs. Okay. Now the issue here is we need to report this. Now let's come back. Let's take one after another. Only one or two risks let us take. Number one, sale of gold loans or any loan, housing loan or whatever it is. Sourcing client is one activity, first activity. Document collection is, there can be a risk in the activities in the risk identification. In the risk identification, risks are numbered. In this, there are 15 number of risks they have identified. Possible that they could not have identified the risks, but it is for the chartered accountant to identify if some risks are not made, if some risks are not given by the bank, it is for the chartered accountant, he can add up, sir, this particular risk is not added up. Now, we can identify furthermore risks. But in this, the bank has identified only 15 risks. And those risks are tagged to an activity. And this is a risk statement. And if this risk happens, this is how that risk is going to be. Number one risk is that incomplete documentation, inadequate documentation, incorrect documentation received from applicant is a risk. If this is a risk, how this risk will be? This risk will reflect in terms of unavailability of required documents such as KYC document, gold, ornament taken delivery letter, memorandum in respect, DP note, negligence of official in completeness and accuracy of documents collected, blah, blah, blah. All this will trigger if this risk happens. Sorry, I read again. If there is an incomplete, inadequate, incorrect document is a risk, and this risk will happen in this way. That way is unavailability of the KYC, unavailability of gold and ornament delivery report, negligence of officials in respect of completeness and accuracy of documents collected. Can this happen? They say, yes, this can happen. Now, this is a risk that can happen. Now, what is the control from here? What is the control to prevent occurrence of that risk? Is they collect this following documents. That is, DP note has to be there, gold ornament has to be there, witness letter has to be there, copy of arrangement letter, 2 photographs, memorandum, copy of proof evidencing agriculture, customer details. All this has to be there. This is a control to prevent this unavailability. Whether this control is a manual control, automated, or partially automated, management is saying it is manual control. Is this a preventive control, detective control, corrective control? Management is not saying, but this should have been a preventive control. I'm not changing it. Then, whether this control is an automated control, is it a maker and checker or automated or a no maker and checker? Management says this is a maker and checker, not an automated control, because unless a photograph is pasted in the system, it should not go to the next step. Like, when we are doing some application process for our ICAI certificate course, it will ask you to stand before the system camera and take a photo, and then only it will go to the next. Do you have such kind of systems in the banking? It is not. That's what. And do you remember, to generate a DSC signature, you are sending your Google coordinates along with that a recorded message that ensures that your address is matching and you are live talking and recorded. That is a preventive control, and it is a system, not a manual control. Now the banks are not having that. Now, if this risk if this risk of unavailability of documents occur, whether that will affect your income and expenditure, assets and liability, and presentation, banker is saying no. My dear members, I would request you to respond to me on the chart whether you agree with this or not, please. I beg you to please respond whether you agree with this banker's statement. Sir, may I please request the members to respond on the chart whether the statement made under financial reporting risk for inadequate documentation is not going to affect P&L, balance sheet, and this presentation. Is it true, please? Members, please respond, please, so that we can go ahead. So let us make it live. Then I have much more to discuss, please. The Priyadarshan sir says inadequate documentation will not affect P&L. Anything else, sir? Anyone else can counter Mr. Priyadarshan? Can someone count? Can someone counter Priyadarshan sir's comment as no? Can someone counter, please? I think the members are active. Yes, sir. Okay. Yeah, I said what that bank says. Yes, sir. That's what. That what the bank say is not correct. Yes, sir. Sure. Excellent. It can be result as a penalty for non-compliance. Yes, sure. It will result in penalty for non-compliance. But will it not affect your balance sheet? Like here, inadequate documentation of KYC, we have just now seen in this that it is resulting in a duplicate customer ID, and duplicate customer ID is resulting into profit and loss account overstatement, profit and loss and balance sheet overstatement, and understatement is getting affected because of ineffective controls in KYC. But look at what banks are saying here. It is saying no. Come back again. Let us look at the frauds in gold loan. This is what I am saying. This has been picked up from the CBI. This has been picked up from the CBI. CBI. Yeah. This is a case filed by the officer to the CBI. First information report to CBI. And the CBI is registered, CBI, ACB, and a gold loan. This is the comments that I have copy pasted there. These are various gold loans on various dates. Now once, sorry, if you can take, if that branch has, if the branch has maximum number of gold loans, if the branch profile is gold loans, or say 20-30% of the branch profile is gold loans, if you can take a report of the loans where you have an account number and name and so on and so on, and with date and sanction limit and so on and so on, if you can sort on the date, if you look at the maximum part of gold loans are dispersed during 1 month of time, or if date is not mentioned, if the account numbers are mentioned, if you can just sort on the numbers, and if you find that the numbers, serial numbers are with close proximity, if the serial numbers are close proximity with numbers here, you can see here 720, 722, 754. And these are all indicating that the loans have been dispersed in one particular time. Now, these are all where you can make out many analytics on looking at the account numbers, looking at the back number, looking at the names, looking at the date, looking at the address, looking at the phone number, looking at the email ID, looking at the survey numbers. And that's how you can talk about analysis is part of it. More than that, you can see here the reasons written by the officer to the CBI. Yeah. Here, this is what. So these are the facts that I have just copy pasted into this here. Now you can relate these incidences with the risk control matrix. And you can see here, these risk has happened because of, you can see here, the gold loan bags were not traceable, meaning they were not matching with the gold. Loan applications do not bear photographs, not head to KYC. And this has been written here as a this has been written here as a risk, and this risk has resulted, and all these loans have become bad. And now the bank is saying here that it is not going to affect any of those. So now this is what I said. This is what I said. Risk control matrix preparation itself has an error. Then the auditor has to raise until the quantification of risk itself is not there. And those risks that you have quantified, the controls, what you said is weak. The controls are wrongly defined, or the controls are inadequate. And the impact of financial statement, what you have said itself, we will not agree. And to this extent, sir, I'm saying, to this extent, if we can raise, to this extent, if we can fill our IFC report and LFARs, this content, the stories, if we can fill LFAR and if we can fill IFC, I'm damn sure for next 10 years or more, we are bound to get bank branch audits, and it will not stop, as you all said, that in 2 years, 3 years, and 5 years of time. I hope everyone knows to what extent they have done this IFC in the last audit, and it is there. Many banks have made this IFC reporting to the branch auditors alone. So I've just taken one simple risk, and now you can just see here how many controls are maker and checker. The total maker and checker are 14, meaning out of 15 risks, the branch has only maker and checker control. And now you see the total process. Further, this is the process flowchart of loans. Now this is 14 or 15 processes or risks they have talked about. And this legend, it is called as, this diagram, this dabba, this format is called as a legend for manual processing. This dabba or this box or this legend is called as a process for CBS process. Among 15 processes, there is only one process called CBS, and the rest of it is all manual processes. Now you can understand. Now you can understand what I have been talking about in this IS audit requirement. Come back here again. Now look at here. We are talking about here customer ID. Now come back here. You look at the controls around CIF, whether client is already having. Now see here, sanction authority goes through the appraisal note in detailing along with document and sanction loan. After this process 5, they will come and ask the client, do you have a customer CIF? If the branch manager knows or doesn't know the CIF, if he is in a hurry, if he says no, he will be creating immediately one more CIF, though the borrower already has one CIF. like here. Here, branch management staff itself has multiple CIFs, and you can understand what kind of system preventive controls are there with respect to multiple CIFs. And I hope I'm able to convince you about what is risk control matrix with respect to the internal financial controls. Okay, having understood this, let's move on to the next process. So now coming here, I have talked about fuzzy lookup KYC, and we are looking after doing the fuzzy lookup work. After doing the fuzzy lookup, you are able to identify multiple accounts. Not only that, yeah, 1 minute. Yeah. Not only this, the risk here is, yeah, the risk in this case is, if one phone number, we want to know if one particular customer is controlling maximum number of accounts. That is also a risk. That is also indicates that the KYC is not followed properly. If one particular email ID is hooked to many accounts, if one particular address is hooked to many accounts, maybe loan or deposit, if one particular PAN, if one particular Aadhaar, if one particular phone number is linked to many accounts, that is an indication that there can be something can go wrong with that. How do I find out that? That is also an indication for a faulty KYC compliances. Hence, the procedure we need to follow is obtain the customer master with phone and so on and so on. I have written what to do. I will be sharing this presentation also. Yeah, coming back here. So there are phone numbers and customer name. You can find out this. Now what I am doing is I am creating a pivot table. I'll just remove this for a while and then we'll work out. Now, what is critical in this? What is critical in this name and phone number is, should I arrange phone number wise names or name wise phone number? Should I arrange data email ID wise names, address wise names, PAN number wise names, Aadhaar number wise names, or name wise phone, name wise email ID, name wise phone number, name wise address? Which one should be done? Which one should be done? I say phone number wise names you will get. You should put it and take the number of, you want to know how many names are there, how many names are there. So you take the names here into this count. And now you will see here, there are 185 accounts. There are 185 accounts to this phone number. Not only that, you want to see maximum number, how much, you can just go on scrolling. You will find here, there are 43 accounts to one phone number. Okay. Now we'll see again somewhere. There are 28 accounts in one place. And similarly, we'll see here, yeah. You can see here, one phone number is having 16 accounts with one phone number, and so on and so on. You can find out. Here, 14 accounts to one phone number. I don't say this is something wrong, but this is 75 accounts here. What I'm saying is, If you observe maximum number of email IDs, maximum number of phones, maximum number of address is linked to one, and whether that link to one fellow is having multiple accounts like loan accounts, deposit accounts, and so on and so on, there is a possibility that the loan accounts may be transferred to the savings bank and loan accounts may be transferred to the deposits, and there can be a round and re-round trippings. Now this gives we have to rule out if one phone number linked, if email is linked, and so on and so on. If I can take the account copies of these maximum for 5 or 6 people, I can do this incidences. If I can get the account copies of all these, you can see here Abhinandan Gulecha and Gulecha Abhinandan. In earlier example, we could able to see this. And this Abhinandan Gulecha is having one CIF and Gulecha Abhinandan having one CIF, but both are same. And this name is linked as a director here. This name is linked as a proprietor here. And this name is linked as a partner here. And this is a loan account. And another are FD accounts and so on. Now, the moment I have linked all this to type of accounts, I have asked for the account copies and pasted one below another. And I have written what to do here. You can read out. Now, what I have done is I have just put this sort. Now it is on date. I will sort it on account number wise. So what I have done, I have taken all those 17 or 18 accounts and pasted one below another. You can see here 66,566 is the account. These are all the transactions during the year. And these are all the transactions during the year in that account which is related, and so on. Like this, I have taken all those accounts and pasted one below another, and I have added one, and I have added to whom this row belongs to. I have tagged each row of account number. Now, once after that, when I sort it, I have tagged each customer account for the line. Each line I have tagged with customer account number, because when I sort, I should not lose the identity. So I am now sorting it on date wise. So when I have sorted on date wise, you can observe here on 3rd of April, 776.25 lakhs is withdrawn, or check is issued to 776 within the same branch. So on 3rd, 776.25 lakhs has come. And if you can enter into the teller room and look at the date stamp, he will show you the date stamp and all. This has happened around 12 noon at 12:20 or 21 time, and 12:22 within 2 minutes cash is withdrawn, and within another 5 minutes a cash is deposited in the same account here. The loan funds are taken into another account, from there into the personal account, and from there into the company account. Routing and rerouting is being done. And this is how the loan funds are misappropriated. And whether this needs to be reported, let us look into the LFAR. Now you can see here round tripping of funds. Under this clause of frauds 4, you have to report about the round tripping. If you have to report under the round tripping, if you have a professional skepticism by looking at the data, and that is what we are seeing here, and this is what we said here, identify and assess the risk of material misstatement, design and perform audit procedures in response to the risk, and obtain the audit efficient that is sufficient and appropriate to provide a basis of opinion. I have identified and assessed the risk that there can be a multiple accounts controlled by one single person. And if it is done, he can manipulate the funds. And whether due to error or fraud, I got a professional skepticism. I have a professional skepticism that 185 accounts are linked to one particular person. And when I got a doubt, I have designed and performed an audit procedure of what? Of getting getting all looked up, all related account copies. I have brought it, and I have carried this procedure. And as per this procedure, I have seen that there is routing and rerouting is going on. Should I have to report? I have to report under LFAR. More so, in my audit report, I am saying, yes, I am carrying out the audit in this format only. And this is what I am saying. I am following this Dharma of SA 315. Coming back again to this here. Now, let's go back to what is the control lapse which is allowing this to happen. What is the control lapse which is allowing this to happen? The control lapses. Management is aware that one telephone, one email ID, one address is hooked up to many accounts, and they are not grouping that into one. They should group it as one. There is a provision to group it. This configuration is an issue. Go back. This is what I said. There are configuration issues. There are configuration issues. There are mandatory field issues in IS audit. And now we are able to see those here. If you configure this as a group account, and any number of transactions that are being carried out within the group, you can stop it and you can ask for necessary stringent documentation, and you can allow that to pass on if those transactions are as per the market value. This provision is not there in the banking, and hence we have lost 3 lakh crores. I think members will accept most of the banking frauds happen through related party definitions. And that related party need not be the definition of related as per income tax, as per Companies Act. But here I am saying one telephone is relevant. One telephone is linked to many. One mobile is linked. One email ID is linked. One address is linked. That's a clear indication that something wrong can happen. And once that risk can happen, what are the controls built around that risk? Whether that risk will result in P&L or balance sheet or financial statement misrepresentation is not quantified in any of the internal RCM IFC. Now you can see the risk of multiple phones is a risk, and it is stated in many cases. Not only that, it is stated even in the RBI early warning signals. It is said as a risk, but since it is, even though it is said as a risk, that the bankers have not identified that as a risk, nor they have put on controls, nor they have quantified that it will affect. Now, this is the role of a chartered accountant, to enter into and make them aware. Our value addition needs to be highlighted through these kind of processes. Only then we are sure that for the next 10 years, we continue to get the bank audit. Now, I'll just stop here for a while. I need 15 minutes of 15 minutes of rest for some time to recoup the energy to come back again. And I think the organizers will permit me 10-15 minutes of break, and will reassemble by 35, so around 5:50 will reassemble, and then we'll continue with the risk control matrix analysis of term loans, of CC account, and then the integrated audit planning and all, and then we can wind up for the day. May I take a rest, please, for some time?
Sure, sir.
Yeah, sir.
Dear members, due to ill health of our speaker, sir, we are taking a short break of 15 minutes. May I request all respected members to please remain logged in. We will be back by next 15 minutes, sharp at 5:50. Is it okay, sir? 5:50?
Yes, sir. Yes, sir. Yes, sir.
Thank you, sir. Thank you all members. Please keep logged in.
Yeah. Shall we start, sir?
Yes, sir.
Yeah. Thank you. Welcome back, members. So we were discussing before we have gone on the for break. We were talking on only 2 or 3 fields weakness if data entered in this not proper and the controls around this. We are talking about only 2 or 3 fields, and if you can look at there are 18 screens that are rolled out. There are 18 screens that are rolled out for enrolling a customer in the bank. And each screen has so many fields. Each screen has so many fields, which has an impact. Like if it is an NRI, then FEMA compliances and non-compliance to the FEMA will attract so many penal provisions and so on and so on. You have when you have so many fields here, you can understand why bank is collecting so much of information. Bank is collecting every information only with respect to there are so much of information is collected. It's not because of one issue, because anti-money laundering law is applicable to the banking, so they have to comply with, they add some figure, they add some fields. FEMA compliance has to be done by the branch, by the banks. So for that compliance, they add some field. For GST compliance, for income tax compliance, and so on and so on, there are various laws and regulations impacting bank. As per those laws and regulation, they need to collect information. And they have created all those. But whether it is mandatory is a biggest issue. And we have seen it is not a mandatory field. Now, do we need to report that non-compliance or non-feeding of data in all these things? Is it, will it come under our purview where, like you can just see here, beneficial owner data is not made available here, but it is as per one of the RBI circulars, they need to get all this information. You can see so much of data is left blank and nothing is entered there. Now, if information is not properly gathered, why information is taken? First of all, why is that so much of information is gathered by the bank? For the purpose of decision making and for the purpose of compliance with various regulations. This is the reason. Now, to this extent, in LFAR, you have a field and they are asking us about management information. You can just read this. Under column 6 of the LFAR, we are supposed to write whether branch has a proper systems and procedures to ensure data integrity related to all data inputs which are to be used for MIS at corporate office level and for supervisory reporting purposes. So unless unless I thoroughly go into all relevant fields and keep asking them the questions, I hope you agree that we cannot express an opinion on this. But RBI says, and many bankers says, most of us agree that here we are writing yes. And if it is yes, then why management information system and decision making system in the bank is so poor? So what I am saying here is, before I say here yes or no, if I say yes, I should have an audit evidence to say what is the basis for me to say here as yes. What evidence did I gather? What information did I analyze? What information did I source? And what procedures did I carry out to say this as yes and no? That is what the regulator is interested in looking my working paper notes. To this extent, we need to carry out our working papers. And that's what I have shown you in Excel here as an integrated working paper here, control sheet. For every aspect of LFAR, let me just go into the LFARs also again. So again, for every aspect of LFAR, we need to standardize the content, and then those needs to be taken into at appropriate places. I'll come back to this a little later. The point what I'm trying to emphasize here is that unless we carry out the audit in a more integrated manner, we cannot able to report this. That's what I'm saying here. Now coming back again to this, next one comes here, exceptional cash debit and exceptional cash credit, meaning the amount of cash debit and the amount of cash credit that should be allowed in the account is defined to this process. Like most of us might have read the sanction letters. Term loan or loan sanction letters. In that there is a condition that the cash cannot be withdrawn. Now, if cash cannot be withdrawn, while the loan account is structured or configured, they should fix the cash exception limit to 0. So they cannot withdraw cash. If at all he has to withdraw the cash, they have to take a permission of the higher up and they have to submit certain documents, and only then they should allow it. But today, do we have such kind of controls, preventive controls? I don't see such kind of preventive controls. So this is not a mandatory field. You remember I was talking about mandatory field in ISA audit. So this is not made as a mandatory field. And we know as an auditor to so many borrowers, we have seen cash is withdrawn from term loan, cash is withdrawn from CC accounts. And at the same time, we have also read the sanction letters that the cash should not be withdrawn. Now, on the other side of the table, as a bank auditor, we are seeing that there is no control on this. And bank has not even identified cash withdrawals as a risk item, and there are no controls, and they don't even say whether it will impact the profit and loss account or not. So I hope you understand the way in which we need to proceed. Now, the impact of not making this as a mandatory has resulted in many banks a big frauds. More specifically in the Bank of Baroda in 2015 October, may not be a long time, but even today these things are going on. 6,000 crores of black money is remitted out of country, huge foreign resource. 38 current accounts were opened in Kanpur in one branch of Bank of Baroda, and all of them is opened with single phone number and single addresses. No questions were asked. That's where preventive control is missing. Even today this is happening. Even today they are happening and no questions are asked. And huge cash, 6,000 crores worth of cash is deposited. And you know very well, one of the RBI circulars, newly opened current account, cash of more than 1 lakh cannot be deposited. If they want to deposit 1 lakh within 6 months of the account opening, they have to submit the proof, they have to submit the relevant sources to the branch manager, and only then the branch manager has to accept it. For that, unless you notify this, unless you stop this many figure, this is 1 lakh crores. You have not altered this at all, and hence this big frauds are happening. And this is what I say again, at every field, we need to ask questions of, is there a possibility of committing an error? If an error is committed, whether that will have an impact on the financial statements. If so, what are the preventive, detective, corrective controls, manual and system controls? These are the 3 ingredients that we need to ask at every point. I repeat again, the 3 questions that we need to ask is, at every activity we need to ask, is there a risk of committing an error? Number 1. If there is a risk of committing an error, whether that risk, if happens, affects the profit and financial statements. Number 3, what are the preventive, detective, corrective, manual or automated controls which will prevent the occurrence of such error? These are the 3. So the total IFC can be boiled down to these 3 things only. Now let's move forward. So this advance remittance of 6,000 crores to a foreign entities, to the foreign countries, comes under the purview of FEMA. And even this was not complied, because the controls under FEMA, under CBS are weak. We need to look into those things also. And now we'll move into out of order validations. As I said, we'll now enter into the control weaknesses in loan processes. One loan process is term loan. The another loan process is CCOD, stock statements and so on. Let us look into these 2 validations now. I'll take you to that same file. So we are talking about now the yes, here out of order validation. You can see here what is out of order validation. I have written 10 points here. Processes, the procedure, the audit procedure that I am carrying out for reporting, for expressing my opinion, I am carrying out this audit procedure as an evidence. Now, as you can just see here, yeah. What I'm trying to do here is, I just close this for a while. Yeah. Now this is the CC account report, CCOD analysis report. This report can be generated on a day-wise basis. So what I have done, I have taken this report on a different dates. On different dates, I have taken this report for one customer. For one customer, I have taken this report on different dates. And while I observe the limit and drawing power, the limit and drawing power is same on all these days. This has given to me, this has given a professional skepticism to me, that how come drawing power and limit be same throughout the year? What is drawing power? You know very well, drawing power is stock and debtors. Is the stock, closing stock, is sum of all these stocks and debtors, a percentage of this debtors and a percentage of this stock combined together is stock and debtors, percentage of stock and debtors, margin percentage of stock and debtors as per the sanction letter. Now reduce credit reduce creditors, then this is drawing power. Now, whether drawing power is uniform throughout the year, it cannot be, because if this is changing means this is depending on purchases and sales. In this it says it is uniform, drawing power is uniform, meaning if drawing power is uniform means if 360 crores is the turnover per annum, it says that every day 1 crore is sold. If every day 1 crore is sold uniformly throughout the year, then what they say here is drawing power is uniform. But it is theoretically possible, but practically it is impossible. And this has given rise to me, how can this be same? When I've asked them, how come limit and drawing power is same in all these cases? Then the management, the branch management has said, that then the management has said that there is a facility in the software CBS where if the tick mark limit is equal to drawing power, the system will automatically capture the drawing power and limit as same. And hence, while we have verified the account statement, when we have verified the account statement, then we have understood that there is something wrong in compliance to the to this out of order rule. What is out of order? What is out of order here is that outstanding balances, this is the statement content. You all accept that this is the statement content. From text I have converted into Excel. I'll not be talking about those things. You all can do it. So this is outstanding balance. Outstanding balance is greater than sanctioned limit and drawing power. If this outstanding balance is greater than the limit and drawing power, then, and if that is out of order, and that should be continuously for 90 days, only then it will call as a out of order. Let us see that. Now, how do I verify this? I'm saying here, the system is saying, let me take say 7 or 7.5 crores. So 7.5 crores is the sanctioned limit, and I'm just copying that. Now, when I've copied all that, it is showing it as limit, limit, and limit. And when it goes to certain places, you can find here it is exceeded. Why is it exceeded? Because here the sanctioned limit has changed. Sorry, here the outstanding balance is greater than 7.5, and hence it is saying exceeded. When it is stated exceeded, here the system has started counting with this Excel. Anyhow, I said I will be sharing this with Excel formulas and all. Even this PowerPoint has all this. You can play with this content. So I have seen it wherever it is limit. When it is within the limit, it says it is 0. When it is exceeded, it keeps counting the number of days. And whenever it is at some point of time, you will find huge amounts are getting credited. Unusual huge amounts are credited. And we need to inquire about all this unusual huge amount of credits, because this credit is coming to reduce the outstanding balance, and this credit is from a new loan given to them, and that amount is entering into here. So this is a big challenge, and that's the reason why RBI also is very clear. It says that for every regularization from exceed to limit status, inquire for genuine sources of funds. This is what RBI is saying. So wherever large amount of money is deposited now, which is unusual, then probably we need to ask for the real source. Now, how do I know that something is unusual? So let me just sort on deposits. Sort on deposits, not smallest. I'll sort it from largest to small. Now you can see here, large amounts were coming from, these are all the large amounts. Unusual amounts, and unusual amounts has some account number. And let me just see here, I'll copy paste this formula here. Same, I'll copy paste the formula here again. You'll find some name. Wherever account numbers are there, I'm copy pasting the formula. And here again. Now meaning that there are some frequent amounts received. Frequent amounts are received from some names, and whether these names have any relation with them. Whether these names have any relation. I hope you are understanding what I'm doing. I think you are understanding what I'm doing here. Now, I'm saying that for this business, this kind of amounts are unusual considering the turnover. I'll just take it back again. Sort now, not on deposits. I'll sort it on date. Sort it on oldest to new. Yeah. Now what we have seen is, that huge amounts are being deposited from some account numbers, like here also. Okay, is equal to VLOOKUP is what? Let me just go there again.
Hello. Ma'am, एक बार हिमांशु से बात करना आप.
So now you can see here. Now you can see here some names are coming which are withdrawn here. In this loan account, amounts are withdrawn. Huge amounts are withdrawn by some names. Now, what are all these names? Whether they are related. How do I know that they are related? Well, let me just take you to one process. Toffler.in. Toffler.in. I just say, I'm just taking, for example, nothing to do with this client. Now I say expand. Now these are all the directors. This is taking data from ROC. Expand. And you find this person is controlling so many companies. And this person is controlling another companies. And this person, and this person. And let me just see. And you find these two persons are jointly controlling two companies here. And again something. I hope now you are understanding. A big galaxy is getting formed here. And if you can take out all these names into Excel, export to Excel, And if you can do that, then you can link those names and you can find out whether those names are available in this. Now, what I'm doing is, having observed those names here, I am trying to make a pivot table for this description. I'm coming to pivot table based on that description. Let me just again build it. So I'm taking out the description, debit, credits and all, and then I'm taking description here. Description is this for this in the account statement. This is the description column. For this column, I am creating a pivot table. Now you can see I have used, these are all the account names, numbers, which are described in the account statement here. Like this is an account number, this is an account number in the description field. For that, I have put a VLOOKUP here. This VLOOKUP to this deposit account database. Now it is throwing that the amounts are routed and rerouted within the group. And this is exactly what CBI, CBI has a report, the companies, the banks have reported. This is exactly what banks have reported. You can see this here. Now you can see here, everywhere you can find in the, they say that the related parties, the amount was transferred to the related party. Let me just show you that also. Yeah. Now you can see one of the forensic audit report placed before the CBI by one bank. Registration number does not exist for the lorries. Purchase documents did not match with the vehicle supposed to carrying all this. Has a common director, having a common director. You can just see here. As per the forensic report, so-and-so company sold so-and-so goods worth so-and-so to 3 parties, etc., who are having common directorship. The sales were not blocked, not backed by LCs. True, though other things are backed by the LC, for the related parties, there are no LCs. These are all the companies. Now, the point is, after the risk has taken place, forensic auditor has detected, and after they have detected, now you are writing a letter to the CBI that these are all the red flags that were happening in the company, and these were happening in the bank, and bank has not done anything. And banker is saying these are all the internal control weaknesses that allowed misappropriation. When this has come to light, after the fraud has happened, the forensic auditor has detected it, meaning the detective process happened after the fraud. But if the company was vigilant and having the detective controls, if the company was vigilant and having detective controls of validating detective controls and trying to validate every transaction and questioned why there is a circulation of amounts within these companies who are related parties. That is what I have said here. One of the control weaknesses group. Now, if the detective process is taking place before the transaction, that is, if you are able to establish the relations before the transaction has taken place, it is called as a preventive step. But after the fraud has happened, Now the bank is engaging the forensic auditors to detect, meaning by the time 3 lakh crores has gone into thin air. So what we are saying, the detective steps, the preventive steps and detective steps are one and same. The procedure what we carry out after the risk has taken place is called detective. The same procedures if you follow before the risk takes up, before the transaction takes up, if you take up all those procedures, it is called as a preventive step. Now, our role as a chartered accountant, auditor for internal financial control is to educate the banker that you have a lot of preventive controls. This kind of value addition is what bankers and RBI is expecting from the chartered accountants now. It is no more NPA audit. It is more of IFC audit. Hence, coming back again, I'm saying here, by making descriptive on the pivot, you are able to find out certain other things again. You can see here, I'll filter it here to find out SBI. You see, standard amounts are made to SBI. Maybe these are all some challans, maybe. Then let me search for Kotak. You see, a standard amount is paid to every month. Standard amounts are paid to Kotak. What is this? We all know this is none other than the EMIs, HDFC. You see here every month standard amounts are made up to SBI, to HDFC. Now, can I find how much is that? You can go to this place and say HDFC. And this is all. You can easily find out how much of diversions are happening in this. Now, is there a control on the diversions? Risk control matrix impacting the financial statements. Bank has never defined all these issues. And it is for the auditors to raise these issues in internal financial controllings. And this is one aspect I thought I'll share with you. Let me just clear all this description. Okay. So this is one analysis that you can make on the account, and what you can make, I have already given here. What procedures you need to carry out. Now, coming back to the statement analysis, stock statement analysis. So I'm writing here a template, a stock statement template, because if you look at the CBI cases, okay, let me just show you CBI FIR. You can see here every day cases are filed. Every day cases are filed in this. And these are all previous FIRs. Thousands of cases are filed. And you touch out of 10, you touch any one, there will be a bank fraud case. You want to see, you can just see this, I think. So I'm just this, this is not. So you touch any one case, you will definitely find a bank fraud case. And I have taken up all those bank fraud cases here. You can PNB, GT forensic report, you can GS, PNB FIR August 2021. And you have SBI documentary banker documentary deficiency related FIR case, gold loan FIR case, 820 crores fraud case, and AP rice mill related CBI case, and UBI role of chartered accountant in this. Like this, you have so many cases in this FIR database. Why I am specific about these things is that if we have to write stories in internal financial controls, if we have to write stories in LFAR, that stories will only help us to get future bank audits. It is not that I only write story or you only write stories. It is all the 1 lakh chartered accountants today have to write stories, and these stories should bombard the RBI, and only then they will realize that this bank audits cannot be suspended abruptly. This needs to be there for years to come, and that can be done only by us through valid working. Coming back again, you have here, I've just designed a small template here. And if you can fill this, only this small template, rest of that is all formulas. And you can edit these formulas as per the sanction terms and conditions. Now, raw material, consumable, and finished goods. So this is closing stock, and this is DP on stock, and this is DP on debtors and stock. This is the drawing power. This is the outstanding balance as on CC on a particular day. And this is the sanction limit. And this is what banker will show you. This is what banker will show you and tell you that, sir, see, the sanction limit is this. Drawing power is very less. And all that is within the limit. So this account is perfect. You need not bother about it. But in one of the processes, in one of the loan processes, let me just highlight you. There are 30 processes for loan sanction disbursement and so on. And in this process, wherever red is written is a high risk. Now coming back here, the last process is related to data entry and related to CBS. And you see here, it is highly risk, and highly risk. And you can see maker opens the loan account by linking to CIF. If at all CIF is known, they will do it. Otherwise, no. The input of details about the facility and all is done in the CBI. Mind it, the sanction letter is not generated by the CBI like IRCTC ticket. In Kotak Bank, in Karnataka Bank, in HDFC, in ICAI, there are certain loan products where sanction letter is generated by the CBS, but PSU banks, first loan is decided on a Word, MS Word and Excel. Loan is sanctioned, and after that, the data is entered into the CBS. Now you can understand what difference it makes. If loan sanction ticket is generated through CBS and only then funds are dispersed, that is a preventive control. But once the sanction ticket is sanctioned by the authorities and then you want to enter it into CBS after a MS Word is generated, then you will understand it is a detective control. And to this extent, out of 30 processes, you have so many red flags in this. So this is what we need to understand. So coming back to the statement here, I have disclosed about that to make you understand the controls around the stock statement verification is very poor. So to highlight that, I have just taken this. You can see here, I have made a ratio analysis. I made a ratio analysis for the stock statements, and you find here 50% of the stock is consumable and less than 50% is raw material and finished goods, meaning the stock mortgage to the bank is highly inferior goods, substandard goods, number one. Number two, if you can compare the stock with sales and all, it will be very huge, disproportionate. I'll show you that also. More than that, if you can read the stock statements very closely, which banker is not doing it, you will find lot of machineries, tools and spares are included in the finished goods and raw material. Because the borrower is so intelligent, has realized, has sensed that the branch manager or the branch credit officers are not reading the stock statement. They know that. And hence, every Tom, Dick and Harry stories are written in the stock statement, never validated. And that you can able to find out with this. And whether the stock statements are validated as per the risk control matrix, nowhere they write all these things. And it is for us to highlight. Then you can look at the debtors, opening balance, current sales, closing debtors. Collection is opening debtors plus sales minus closing debtors is the collection technically. But if you look at the CC deposits is 7,000, technically the collection should be 10,000. Meaning, if you ask the borrower, he says, sir, my debtors are perfect, my GST sales is perfect. Then what happened to this collection? If debtors and sales are correct, then this collection is routed into undisclosed bank accounts. If this collection is not true, then debtors and stock is heavily manipulated to get the drawing power. Either of this should have been a wrong thing, and that is none other than the early warning signal. Okay, that is one thing. Next, coming back to cost of goods sold. When you have opening stock, finished goods and raw material and so on, you can calculate cost of goods sold. And when I've calculated cost of goods sold and compared with the sale, I'm surprised to see the margin is just 7%. When I have taken the CMA projections used for renewing the loan, the gross margin estimated by them was 40%, because any manufacturing will definitely have 40 to 50% of gross margin. And administrative, selling, marketing, blah, blah, all that will have. So at least 35 to 40% will be a gross margin, and that is what is projected by the CMA data. And with 7%, I hope you understand that the going concern is going to be affected. And it was affected. And no questions were raised. Next, debtors. Debtors in days, average is 300. Stock in days, average is 600 days. Meaning we know very well, debtors is 90 days and stock is only 180 days. But you see huge of this. Now all these things indicate that there is early warning signal. Let me just open that RBI circular of early warning signals. Early warning signals. Yeah. Now you find here red flags. We were talking about these red flags. You remember we were in one of the in one of these CBI case, the bank itself has accepted that there is a red flag. Yeah. And those red flags we are talking about here, early warning. So what? How many early warning signals are there? There are 45 early warning signals given here. You can see the large number of interconnected transactions, companies, significant movement in inventory, significant increase in receivables, but no increase in sale, disproportionate increase in current assets, significant increase in working capital borrowing. Now we have seen here heavy cash is withdrawn from the loan accounts, movement of loan account from one bank to the another bank account, and not routing of sale proceeds through the loan accounts. I hope we have seen here substantial related party, material discrepancies in annual return, inconsistencies within the annual report, poor disclosures, all this frequent changes in all this you can observe. Frequent requests for general purpose loans. These are all frequent ad hoc sanctions. All this is early warning signals. And if there is an early warning signal, this should be made as a red flag. And once you made it as a red flag, the account should be observed for 6 months. And after 6 months, you should stop this account operation. And that is what you see here, this red flagged accounts. What you have to do with the red flag accounts? You have to inform to the Acrylic platform. So these are all the compliances. But are you seeing this here? Yes, you have noticed. What is the action? First of all, whether this early warning signal related internal financial controls is taken in the risk control matrix? No, it is not taken at all. And this is where we can make a value addition. Okay. Now, do we need to report this early warning signals in our LFAR? Let me take you to that process here. Early warning signals. Whether the system of early warning framework is working effectively and as required, the early warning signals form the basis for classifying the account as a red flag. We have seen here, we have seen in this account now so many early warning signals here, and this account is not classified as a red flag. Coming back again to this again. How do I make this? So to report under LFAR, what audit procedures do I need to carry out? Like, as I have said here, there is a risk of early warning signals being carried out. So I need to design and perform audit procedures in response to those risks of early warning signals. So what audit procedures should I take and gather the audit evidence? Come back to this. These are the, you have seen, these are all various 45 instances of early warning. Now, what audit procedure needs to be carried out for each and every one? It says in merchant trade, import leg not revealed to the banks. Analyze the GST returns and custom data. Frequent invocation of BGs and devolvement of LCs. What do you need to do? Look at the CBS reports. Same collateral charged to number of lenders. How do you verify? Look at this CIBIL credit rating and so on and so on. So significant disproportionate turnover, I said, stock analysis, increase in borrowings despite huge cash and cash equivalent borrowers balance sheet. Look at the cash flow analysis. Now, significant inconsistencies within the annual report. How do you learn this? From the institute ICAI FRRB reports you read, you will understand how they are doing all this. And how you have to get data from where I have written it here. And there are certain things where you have to visit the outside data. You have to visit the outside data to find out. So these are all those data where you can find out the outside data. And this is how you can carry out early warning signals. And this is how you can report the compliance to various LFAR issues. Now, so this is all about CC account, and I'm left with only one thing called term loans. I'll quickly refer to that and then we'll wind up today's discussion. Now, if you look at this statement, if you look at the term loan statement, you have limit, interest rate, theoretical balance, you have EMIs, and then you have what is the actual installment. Now, I hope you all agree, in a normal bank, in a normal client audit, other than banks, while we are doing bank vouching, we will calculate the interest and then we counter verify the manual calculation of interest with the interest that is debited in the loan account and tell our client that, see, your banker is cheating you. So what I'm saying is, when we are validating the interest calculations and counter verifying with the CBS report, in the same way, we need to validate the installment amount, number of installments based on the loan amount, based on the interest amount, based on the period. So let us see how this can be done in this. Look at, banker is telling you that his EMI is 2358, 23561 for a loan. Banker is saying this. But can we calculate what is the EMI if the rate of interest is 8.5? If the period is 24 months, if the loan amount is 7.5 lakhs, then the way in which you have to calculate EMI is equal to PMT. And what is to be written here is equal to PMT is rate. Rate is 8.5% by 12 because every month. And now this present value B4 is this period is account number of months. And this B5 is the loan amount. If you use this formula PMT, then you will get the EMI. And that is what is this EMI. Now, banker in his term loan statement, he is saying this is the EMI. But when you calculate, you get this EMI, meaning the rate of interest would have changed, the amount would have changed, period would have changed. Of course, the interest cannot change, loan amount cannot change, but only thing that can change is the loan period, because manager has a discretionary power to enhance the loan period. So how do I find that? Through a goal seek. I am trying to find here the difference between the EMI, audit EMI, difference between the audit EMI and banker CBS EMI is 10,000. Now I am going to use goal seek. I am going to use goal seek under data, what if analysis, goal seek. This B11, this should be 0. When this should be 0, when this becomes 0, what is this 24? If this difference between audit EMI and CBS EMI is 0, when it will be 0? When this is increased. Let us see how much increased. I am working backwards. So when the original loan is 36 months installment, then banker EMI is 23,561. But banker CBS report is saying 23, meaning what? During the year, there could have been a restructuring in the account, and hence this is showing variation. And if you can run this formula, then probably you will be able to identify. So I have structured it, difference between goal seek at all. Now I will do this through a macro for all that. Run. Now that goal seek I have put as a macro. After I have put as a goal seek as a macro, now it is saying I just stop this. And now you can see here, as per this EMI, the loan term should be 182, whereas banker is saying this. This is one kind of analysis. Further, if sanction date is given as on the date of 31st March 2021, you can use a formula called dated if. This will tell you what is the EMI from the date of loan till date is 159, but banker is saying this. Now all these discrepancies we need to discuss with the management, and the process I have written here. So the two important things we have discussed here, the loan amounts, the CC account, and these. All along we are only saying that the internal financial controls are going to be the crux of the day. And I think these are all what I have already explained to you. And you can see here, system-driven NPAs, how reliable is that? Can system detect evergreening? Now, RBI is saying you mark NPAs on a daily basis. Now, RBI is saying, since there is daily basis of RBI, daily basis of NPAs are done, I don't require any more audits. But whether daily marking of NPAs can be done under these situations? No, it cannot be done. And this is what you need to highlight in our LFAR, in our internal financial controls, in our MOC. Transfer from sister units, new loans to related parties, check purchase, and whatnot. All these things system cannot detect, and system is not made to write all these. So early warning signals I have already talked about. Fund diversion we have already talked about. And various financial reports I have already given here. What to be done. And this is all I am talking about. The audit engagement letter I have already disclosed about this. So this is what various manual controls are still in progress even today. And hence there is a huge risk. So accordingly, we need to proceed for our this year bank audit. So my energies doesn't permit to go beyond this. Thank you very much for your patient listening.
Thank you, sir. Thank you for such a wonderful and interactive session, sir.
Thank you.
Are we allowed to take any queries if any member wants to ask?
Yes, sir. Yes, sir. To the
I
extent
request
my
members to
knowledge
please
permits.
post your queries if you have any. I guess there is no query for any of the members.
Yes, sir.
Shall we conclude, sir?
Yes, sir.
So may I request our chairman, sir, CA Mohit Singhal ji, for vote of thanks.
Yeah. Sir.
Thank you. Thanks a lot, Jitendra ji. First of all, a big thanks to Premnath sir. Sir, irrespective of your ill health, you have taken out the session so wonderfully. A big thank you to you,
Thank you, sir.
Premnath sir, on behalf of the entire fraternity of the Gurugram, sir. We are always obliged to you, sir. And on a single call, you have accepted our invitation and give your precious time with the branch, sir.
Yes.
This will be the greatness of yours, sir. Thank you. Thanks a lot for being with us, sir.
Thank you.
And I also like to say thanks to each and every member who have joined us in this 4-day virtual series of bank audit. The last 2 days are also going to be very much practical for the members, where we are going to get many new things in respect to this bank audit. I request all the members to please join us tomorrow also. Thank you. Thanks a lot. Have a good day. Thank you, sir.
Thank you one and all for active participation. Thank you very much.
Thank you.
Thanks a lot, sir.
We are highly obliged, sir. Thank you.
Thank you, sir. Thank you.
Thank you, members. See you tomorrow at 4 p.m. Thank you. We are closing the meeting.